Greetings, market rebels. Welcome to this week's macro measure. I am Wayne. My partner Ryan may have already gotten the week ahead outlook out at this point, or will be coming out shortly. Anyway, it is just in front of, just in front of 2 p.m. here on March 5th, 2023. So let's get rolling. I've been trying to collect my thoughts. There's so many, it's so hard to do, honestly, for me, just with so many things happening, trying to keep track of all this stuff. Here's our trusty disclaimer, and then we'll talk a little bit over this intellectual property and rights notice as you take a look at that. But boy, again, this has just been an amazing year. I think 2022 was an amazing year. There's been a lot of just great trading opportunities. If you're willing to set aside, I think, a real stark or stringent view, if you're willing just to kind of go with the flow, which is a big deal in trading. But just an incredible week. So here's the plan. I'm going to put this off screen in a second. We'll do the quick recap, and you can see that some of those things I plan to note, and then we'll talk a little bit about how risk came back on in a big way, apparently, at least for now, right? And then how the key watches for us with the dollar and the 10-year yield, how they hesitated while the stocks were doing their thing. And then we'll talk about some other important things. I think I've got a couple things that I don't even know if it was myself, Ryan, maybe Greg, I don't know, but we came across some really good stuff I want to share. I'm not sure if Ryan has put it in or plans to put it in the weekly outlook, so it's worth covering. So without further delay, let's stop the share, and let's shift over to the right screen. And the right screen is going to be screen number, well, come on, getting a little fight on my hands here from Windows. Doesn't want me to share this for some reason, but we should be on screen 4. I'm starting out in the familiar item here with the 4-year seasonal cycle. We've been saying that so far this third year, the pre-election year in green, has been a pretty decent analog, and it's been pretty close so far overall. So we're kind of focusing on that. We think everything's an independent, unique situation, but let's face it, right? This cyclical and seasonal stuff does seem to have some relevance. It does have some worth to it here and there, and we did get the little bit of a late swoon there in February, and then they started coming for stocks pretty strongly right as we got into March, and so that's interesting. We'll see if this continues, but that's a spot we've talked about. So I wanted to make sure we cover that because there was more chatter in Rebel Pit this week on this matter. But here's the stuff that I really want to share. And this is going to go, let me just get this position properly. This is what I really want to share. I'm wondering if I should just do this now or do the quick recap. Probably should do the quick recap on our SPYs chart and then come into that. So let's do that, right? I'm going to leave the kind of hot pinkish bear market downtrend line, as I've been calling it there, and then kind of let me click on this. This is the SPY, our proxy, main proxy for the market. And you can see there's this support line, right, of that intermediate term uptrend that we had. And then we ran into this trouble, and fortunately, I think we've been expecting for weeks, like more and more trouble, which is good because we started seeing defensive shifts. But then we said this week really coming in, we thought there would be weakness and that the bulls would really be under pressure. And it turned out that initially that didn't look very good, right? The way that the gang gapped things up on Monday, I was laughing to myself thinking every time I make the note that a lot of these things don't look like immediate buys. What does the gang do? They immediately buy them. But that little routine they were trying to play there gave way eventually on Monday. Things got rough. Things got rougher. You could see the long wick. There was really 3 days of selling there. And then you really got into the test that we were expecting. We were saying, right, and we've covered this stuff so many times, but for anyone that's new or anyone that maybe it all hasn't sunk in, anytime you're around what I would call these big emotional, well charted, and by that I mean many people are focusing on this. This is what really has the potential for what we saw, right? Because everyone's seeing the bear market downtrend line get punctured there on Wednesday, and then further on Thursday's opening. And that Thursday's opening really put us well below the 50 in gold, then below the 150 in rust, and then of course the 200, the all-important mighty 200 there, you could say in violet or purple. And that was right above the 100. So we noted, right, that there would be support in the form of these SMAs, but the gang, as usual, they have a remarkably deft touch, and wonder how they do it so well, so consistently, right? But bottom line, look, they took this down to below the 200, and a lot of people trade really tight. So if they barely exceed key things like the bear market downtrend line that we were expecting to potentially turn into support, right? Convert to support, potentially. No, not saying we thought it would, just that it could, right? But they always try to do a little, what I would just say, like a little excursion beyond areas. And I think what that does is it draws in fresh shorts, which I think happened here. And it also gets some longs to capitulate. The longs that were maybe thinking here, up and away we go. And then they just got battered for the better part of a week and a half to 2 weeks. And then they're losing support at some of the most widely followed areas, big emotional technical areas. And then you get this kind of bounce back. So it was a tremendous, I think, bear trap as usual, engineered by the gang. And I'm going to just say that, to me, and I think I said this, I did actually kind of put a warning out there in Rebel Pit, I think, about this during the week. Probably put it in UOA Pro, some of those ideas we had in there. But then kind of noted, that at the end of the week, I just noted that I think maybe on Cocktail Hour, I think it's a complete joke. It doesn't mean I won't trade it bullishly. I just mean that the spin that's being put on things to justify something that was in the cards, that's more of a sort of spy versus spy, if anyone remembers that old stuff. But really, of course, in this case, it's not spy versus spy. It's sort of like firm versus firm, or firms versus individuals, or firms versus hedge funds. And I think the positioning is the problem, right? So let me just show you that, and we'll kind of come back to this. Let me get that done by seasonal switching strategy. So this is what I mean. This is the positioning, well, not necessarily positioning, but just the sort of the sentiment survey. And you could see that this is just about as bad as it's been in terms of bearish sentiment, right? So look at how bearish the sentiment is here versus other just pretty rough spots, rough patches along the way. So you take that kind of situation, right, where a lot of people, myself included, a lot of people think that this market is whistling past the graveyard, and that given what's happening in interest rates and with respect to inflation, the whole rest of it, and the bogus government numbers, and the whole works, right? All the layoffs, just all the stuff we've talked about over the course of time, and so much more. But with that, and then with this helping the cause, right? This, I heard that they were able to, you're looking at now, I think Ryan said about 44% of the 10-day average options volume there, right? So the zero DTE, this has really become something which, again, it works. It could work in our favor, right? If there's a lot of zero DTE trading, and there's a lot of gamma exposure in the near term, and that you start getting past and through those levels, then that could intensify, because the market makers, dealers, they specialists, shorts, whatever, in this case, all have to start covering, and that just accelerates the situation. So effectively, right, that stuff's really important, that kind of internal plumbing. We had said that we thought that bulls really had to step up to, really retain any measure of control or grip on this market. And of course they did. It was done very deftly, like it often is, where again, they barely exceed things. They'd been going down for a while, and then they ripped them up, and it was just on really absurd algos. It started out with absurd algo stuff that like it normally does, keying off of what Bostic had to say. The Fed's Bostic, who I actually know, grew up in the same hometown, used to play together, play football, pick up football games and things like that together. Really super bright guy, very nice guy. But Bostic made the comments, and this was some sort of revelation, which it wasn't. But the market tried to act like it is, and all the people that talk their book all the time, which is almost long all the time, tried to act as if there was some really big news made when he was really just reiterating, I think, what he'd said before. We'll get back to some of that other stuff, but it doesn't really matter. This is one of my toughest lessons when I got started trading on the floor in 92. I was thinking through it and saying, well, this is what really matters. And that's really not a new comment when I'd see something like that hit the tape. I'm just using it as an example. And what I didn't realize was that the rally that I was seeing, it was bogus, but that it would carry on a lot longer than I had thought. So I really should have gotten on board it earlier and sooner, right? That was the lesson that I learned, because it's really not, as they say in The Man Who Shot Liberty Valance, right? When you print the legend, right? So whatever they're running with, that's what matters, right? The momentum shift is what matters. The bogus nature that they're basing it upon, I mean, that happens all the time. Once I saw how frequently that happened and how I could benefit from it instead of thinking it was absurd, that's, I shifted my thinking. And I think that's just something important for people that are new to trading. If you're new at Market Rebellion, you've got to understand that this was a really great setup, and that this is certainly, this false breakdown and reversal is certainly something that is possible, something we can't rule out. That's why it's so hard when you're getting a breakdown. Not only do you have to think this might be a legit breakdown, but it has to be all in your mind that this could also be a shanghaiing of bears like this was. I mean, that's basically what happened. So they really did. They came in, they really put the screws to fresh shorts, those longs that liquidated, and then you get this. And it's really, again, based on, I think, more or less the internal plumbing and that type of stuff than it is anything else. And just remember that analog that we looked at for the third presidential year, and look at the date here, right? It's the second, it's the very start, the third, very, very start of that March rally that's supposed to take place. So it's been working so far this year. I guess you got to keep taking a glance at it to see how well things track. But I almost made a big mistake on Cocktail Hour saying I could almost guarantee that this trades up to here. Stop myself in my tracks, because I wanted to make it clear that I think you've got to get above the 20-day there in blue. But I think if they get above the 20-day there in blue, then it's almost a fait accompli that you reach that 408, 409 level we talked about so many times way back in here in this whole kind of swath of action. We were noting how that was a big level. So I think that's going to be the big level, again, 408, 409. And then if it gets through there, right, we'll start coming up towards the top of that range that we were talking about before. That's really what I'm looking at now. And what I would say is I can show you that risk came back on just by looking at the sectors, right? A lot of these things really were at the start of breakdown. And that's why we said they better start doing something. That is the bulls. They better step up now. And they did it very deftly, but they rescued most sectors. If you look through here, right, energy's sort of its own thing, but look, it's looking better. I added a few bullish ideas in there this week in UOA Pro. Technology was on the ropes, about to potentially break below. I think there's a flat line below, right near these lows. They saved that and jammed it. They saved communications and jammed it. I mean, the list goes on and on. You can look at virtually everything, and they saved it and jammed it. That's why the sector situation will probably be so brief. Here's your industrials right there. They were really looking like possibly breaking down out of that triangle. Now they've got them back towards the highs. Your pennies from the highs, you could be breaking out. So it's a major reversal. There's just no other way to put it. After there was some corrective activity, right? So let's go back to this and we'll take a look at this right here. So here's another look at the percent of stocks above the 20. I mean, you could see how far this corrected from when we were noting that it was exceptionally high and we needed to be a little wary of what could happen in terms of the rally. And of course, it did play out that way, as it often does. So now, right now, they came back quite a bit and found a slightly higher higher low here. Now they're trying to run them back, right? But that is pretty much the state in every case. Here's a percent of stocks above the 50. Nice corrective action when we thought it was a little overly toasted, and now they're trying to work this back too. And of course, the same it'll be the same, really, but different for the percent of stocks above the 200-day. Nice pullback, took some of the froth off of there. And speaking of froth, we could probably jump ahead just to fear and greed. We were getting there, we noted that, and they backed that off from higher readings, right? So you can look at it on the timeline if you want. And this is where we were when we started getting concerned about things. And you could see where we came back down to, right? So that's a pretty decent little pullback. Even this alternative view on that fear and greed by high investing, they're back towards a 50% greed level. So things have really backed off. And if we just jump over to SPY, look at the daily RSI, even after 2 monster up days, right? So the short term, I think you're overbought. That's why I made my comments on Cocktail Hour. If you were managing longs, this is what I was getting at. The way that if you see this kind of a burst, it's a real big change. And so as much as I think it's farcical, like I do think of it farcically on a fundamental basis, but on an actual trading reality, money at risk basis, I don't think it's a joke. I think you have to take it seriously. And I think it's I don't want to use a word like guarantee. It's probably the last thing someone should do, especially someone like me who doesn't like to get locked into projections and things like that, because I think it introduces your ego into something you should be all about being opportunistic and not really ego driven about your projections and things like that. I just think it helps you as a trader just to be nimble, and not only nimble with how you trade, but nimble in your own mind, where you know that there's no real direct tie to whatever you think and what the market is doing. You can still get it right a lot of the time. But the times when you're wrong, you could hurt yourself pretty bad if you're not open-minded about another scenario that you maybe didn't favor as much. But this is, this has plenty of RSI room to run, right? Easily you get up to here without getting anywhere near 70 more than likely. So what do you say about that? Well, the other thing you could say is, and if we give ourselves a little bit of a view on it, well, ultimately they tested it and it held with gusto, right? They came roaring back. This is above the downtrend, bear market downtrend line. This cluster of lows in here is higher than this visually, right? Just on the visual, which is higher than this October low. So are we still making higher highs and higher lows? Yes, we are, right? There's no denying that this high in here is higher than these highs in here. So they're still, right, we still have to say now the bulls, which were barely clinging to control and things were looking pretty bleak, right? This is your sudden reversal that you get, and this is how these guys operate. I mean, it's nothing new. It's been going on for my 30 years, and I'm sure it went on way before that, as far as folks can remember, or even go back and chart. But the next big test I do think will be up there. I'd be surprised after what we've seen if it just gets stopped in its tracks at the 20 and then just rolls over. Not saying it can't happen, just saying would be surprised, because I just feel like this is despite really strong volume, this to me doesn't just end this way when you see those kind of candles develop. It could though, but I'm just saying I still think it has a little bit more in the tank because of where we were and how poorly positioned folks were. So going back to some of our information that I wanted to share, another thing that we should keep an eye on is something I came across that you can find this on Market Watch, but if you wonder, well, what's going on? Why are they buying? This is one thing I think that's really big. As they say, timing is everything, but sentiment, as we've seen, right, when people have bought stocks up too much, you're probably too late. You should be more patient if you want to be a bull. That's sentiment. Positioning, right? So many people are super bearish on a sentiment basis. And the way that people position themselves with zero DTE likely aided, the bulls in their deft handling of that strong bounce towards last week's conclusion. But the other factor is, right, they're advertising they're draining liquidity, but look what this says, right? On a global scale, liquidity has actually increased in recent months, $1 trillion boost to asset prices. So Citi's claiming the $1 trillion have been injected into the financial system. It looks like, right, relatively recently, or I guess you would say the last few months, recent months. I can't really say specifically. So you could take a look at it yourself, but these things, right, this is what I mean. Yes, timing is everything, but stuff like this, where so many people are bearish, we know that, right, they rarely let everybody that's positioned in line with reason and logic too. They barely let them just win easy. They make you. That's why I've always said that trading in a bear market, I think, is much more difficult and frustrating than being in a bull market. And if you give me a strong bull market that lasts 5 years, like most of them did in the 20th century, every time, because you can do exceptionally well, but you can even make mistakes and still do well. I think in a bear market, you can be dead right, and they put you through the ringer so many times over that a lot of people get frustrated and just want to give up. I think the key for me at least is to just adjust, right, and go with the flow. When you see that prevailing wind shift, neutralize what you're doing as a bear and don't allow the upside to hurt you. And then once that bullish stuff that bullish flare up has passed and you see the downtrend resume, then you can become aggressive again. Plus, you don't want to miss out on bullish opportunities, as well. You want to be able to participate in them. And again, that's where the nimble mindset comes in. You just don't want to get yourself locked in, because there's, again, people maybe don't like when I say this, and I'm not saying it was easy, by the way, but I think 2022 was a great trading year. You had a lot of up and down movement that you could trade in both directions and at times. And this is really great movement. If you gave me a year like this every year, give me a year like this down overall, or a year like, even better, a year like that up. This is just great up and down movement. And there's a lot of opportunity within that. And so far, really, I think, look at this year, right? We've had a nice big run to start the year, and then we've had a nice pullback. And now we might be on the cusp of another run. We'll see. But this, you got to give them the benefit of the doubt for now. So in terms of control, right, there was a big control shift, something I talk about almost every week. And so the bulls really asserted themselves. I do think, right, that you got to be careful, because I think on the 30-minute, for example, which I don't think is chopped liver, the RSI has gotten up there on that 30-minute right now. Like that's at 80. If you look down here on this RSI, slightly different RSI calculation, but it puts you in that ballpark. You're at 79 or 80. So that's really, really high. And so you may need to be cognizant of that. And then, of course, pick your spot. Maybe they're going to, I don't know, for all I know, maybe they bring this back down. There's maybe a little mini gap there, 398.69. Yep. So there's a little like 30-cent or so gap in here. Maybe they address that. I don't know. I doubt it, but who knows? I would say, look, though, a big question that came up in the pit, and it happens a lot, is what do I do? What are your thoughts about going into next week? If I were riding things, unfortunately, I think I would have been. There was a lot of good opportunities, I thought, last week. Towards the tail end of the week, we started adding more and more. We had a lot of bears at the start, and then flipped it around to more to the bull side naturally, because that's where the momentum was developing. But I would, if I were like a 10 lot trader, let's just use base 10. If I had been riding, say, 10 calls and something, and I thought that it still looked good, but the market kind of got overdone, what I would do is split the difference. I'd like to just sell 5 of them and capture the full profits I can as we're closing out on Friday. And then I would overroll half. So in the SPY, an overroll would be buying like something like the 405s or the 404s or the 405s or the 406s or the 407s, depending on your confidence level. But you're just trying to get yourself somewhere really between 35 to 40 delta, I think, on that. But some people that want to be more aggressive could just get that maybe like high 40s delta, or maybe almost a 50 delta. If you had been in something that was 80, 85 delta, because the gamma short-term options, the gamma grew on them, I'd roll into like that 45 to 40, maybe as low as 35. It just depends on your confidence level on that second half of what I had. That way, if it keeps going, you're still happy, you make more money. But if it does jam up strongly on Monday, what I would do is to sell. I would capture right away, capture those profits if they put this thing up another % on the opening, because at that point, the short-term intraday timeframes are going to be overly toasted by to a large extent. So in that case, right, I think it's prudent to take the money, and then you can always get back in, right? But if they then have engineer a pullback, right, you've got the money in your account, and you can decide when you want to step back in as a bull potentially anytime. Or you could be freed up to become a bear if you think they're going to come back and close the gap at the 20. If that scenario plays out, if the other scenario plays out where you open unched or down small, then I'd probably try to watch the opening action, give it some time to breathe, as Ryan says all the time, virtually every morning, and then see what happens. Right, if some bullish action can start developing. And then the key would be to get through that 20 SMA there in light blue. And again, like I said, I think if it goes there, then we're looking at that 408, 409-ish level. Then, of course, as I said before, you're up beyond probably near 414 would be your next level, if they keep pushing it. So those are the upside levels I'm looking at. The downside, probably remains difficult for all the reasons we've seen. $1 trillion comes into the market. The zero DTE thing that they launched can create these kind of vacuums that just these surges. And then you've also got that sentiment, which is the poorest it's been for decades, right? Where a lot of people are in the camp that I'm in, which is probably best summed up by saying the Mike Wilson and Morgan Stanley camp, where I think along those lines. I don't have 1% of the facts, though, at my disposal and the statistics the way Mike Wilson does and his team. But I'm just saying, my general man on the street, from what I've read, and Ryan and I read a lot, Greg reads a lot of that. I just feel like it's only a matter of time. But again, we're not trading that. We are trading this. Like, that's the way we approach it at Market Rebellion. We're trading this action and the momentum, and we're going to adjust. Our big thing is adjust. Well, for me, I think I'm probably the big proponent of being someone that's willing to adjust, knows how to adjust. And options are just so powerful if you learn to use them and fully exploit them. There's so many things that you can do. And I think there's even a temptation sometimes to overdo it and become too complicated. But even inside of simple directional trading, you can do some really cool things that can really help you, and in psychologically, and also on the bottom line. And when you start having doubts, if you could hedge that away very quickly and then unhedge it very quickly, that's pretty powerful, right? Because you're still in the trade, you haven't given up, you're still watching things closely, but you're kind of waiting to see, like, this is a tough juncture, I don't know what to do here. I'll neutralize, right? It can be done. So anyway, those are just some of the things I'd share that way. I'm trying to think of all the other stuff that I wanted to cover, and I will cover some of the other technicals. Just bear with me here. So we had this over here. I think I mentioned a lot of that stuff, but yeah, I think I mentioned everything that we said we would cover. The weakness we expected materialized. There were 3 days of selling. Then came the deftly handled Shanghaiing of the bears. at exactly where a level you'd expect it to be at, right below that bear market downtrend line, right below the 200 SMA. The bulls had to step up. We said eventually they did, right? They stepped up in a big way and really took a lot of the control back. I'm not saying that bulls are back in full control, but it wasn't. It was a big thing on the Richter scale. It wasn't like this was this little tremor. I think this little maneuver here was pretty forceful, and given that it held above critical stuff, and it also kept the price action trend in focus as well, which is higher highs, higher lows. We have to give them the benefit of the doubt for now, especially with the March seasonality kicking in, right? And with things not being daily overbought on RSI, and a lot of corrective activities happened already in the percent of stocks above this, that, and the other thing. So just keep all that in mind. All of it, to me, all of it matters. Like you're trying to paint a complete picture and judge things right on balance. And we can't overlook things as important as possibly converting from once support now to resistance, right where all the SMAs were. That ganglion of all the SMAs were bunched up there. And we said that's why it could be hard for things to slice through. It turned out that it was, never know in advance, but it turned out that it was. And the other factor just is the trend. And it may not look like a real rip-roaring trend right now, but if you say, well, this was the first start of the trend reversal, and then here you go with a little pullback. Here's your second wave, if you will, and you have this shallow pullback here. And now, right, you could get up to here, and maybe if they run up a little bit and then pull back, they could even goose, and we'd finally get that not the next level of bigger bull trap set by eclipsing that 431 and change level we've talked about so many times. So because I've spent so much time on this and the whole macro picture, I don't want to belabor that and go into all these details on diamonds and so on, but we'll take a look at them. But there you go. I think that's a lot of thoughts that I really wanted to share, that hopefully some of these things make sense. Even better, hopefully some of those will help you. Hopefully my take on things is worth something after the time we put in trying to get some of this stuff put together. But yeah, that's my thoughts. But you've got to wait and see if the bulls are really that bold, right? And can they now just click their way through, click their way through the various forms of resistance, starting with the 20-day, then that resistance line, which is also going to dovetail very nicely with our 408, 409 level, probably, I think. And then you've got you've got these former highs, which are near right near there. Look at the high, 410.49. And then you've got right above there by another percent near 414-ish. So that's what it could be. But if you get through here and you get another nice wave of running, right, that would carry on fairly well. The slope of this isn't particularly amazing in terms of you're not going up super aggressively, but a lot of people like that. It's great in a bull market, but when you're in a bear market, it almost, like we were, I think it almost guarantees practically that it's just a bear market rally because it's moving too swiftly. This is not moving too swiftly. So again, I'm going to give it, I think, the respect that it's due. I could be dead wrong by Monday morning, right? It could be all fall apart, but I'm giving it this respect for now, and we'll see how this acts when it gets towards resistance. Clearly, right, the downside is the one we need to talk about to finish up on SPY, but the downside is there's every SMA from the 50 on down, 100, 150, 200 is there. The bear market downtrend line, which now could be support, is there. So, and the seasonality says, right, the gang tries to rip things, and they've got the right sentiment in place to potentially do that. I also think that there's a lot of people that are getting too far ahead, and there's a lot of people that are just super long already, thinking that it's all over. So I think maybe they'll have to have a reckoning down the road, or maybe it'll be sooner, but maybe if we do have another bull leg to the upside, maybe that will be that'll set the stage for a bigger reckoning for those people. But I just feel, my sense is that a lot of money despite the sentiment being bad. I feel like there's some folks have just dumped a ton into this, and maybe part of it's that liquidity surge from the globally, from the central banks. But we'll get back to where are we on, I don't want market rebellion, crypto community. Where's our, this one. So let's just follow through on that. Again, another source, but this is that third year in the presidential cycle pattern, 13.46%. We have it here. This is another one that people were wondering about, where does this come from? Here's your third year. This is from Yardeni. So if you want to know, like, oh, how can I get those? If Ryan hasn't put them in, they were put in at some point, but you can find those. Just look up presidential cycle, S&P 500 performance, Yardeni, and I think this PDF will come up. Remember where we are in terms of this, okay? And then finally, I'll end on this in terms of the browser stuff. But look, if you look at the probabilities, if we were to multiply all this out, you're probably coming in somewhere between 525 and 550 overall, right? So with it being here, this is by September. So with it being here, right, you're over scrolled, but with it being here, you're looking at still going up significantly. There was something I came across that had to do with the 5.5 level has been death for a lot of rallies in the past. Once they've gotten there, I don't know if that will matter again. Maybe it will, but I'm just saying that seems like that's what the market is still thinking. And remember, the final thing I need to probably add here again, now that it just occurred to me, I think my recollection, and I wish I had these dates, some systems have these. Ryan and I've been planning to get those into our own system if we ever got a chance to build it, for such a long time, to have a lot of key dates that are automatically there so that you can look back in the past and see how stocks performed leading up and in the aftermath. But I'm pretty sure, my recollection is that generally they've been of late rallying towards that Fed meeting. So even if we have a little bit more back and forth, and this week still more of a singles and doubles week, which it may or may not be. I think last week wasn't all the way until really that Thursday turnaround. It was definitely a singles week. But then you get this, you might have more of that, but you could get that trending action that could produce even bigger stuff if we get through here. But they've generally rallied, I think, into the Fed meetings of late. So that would also be something worth noting to keep in the back of your mind as well. So since I've covered everything that way, let's just take a look at the other major ETFs, and I'll probably just cut it back slightly and we'll just wrap things up. But breakdown out of our triangle right there, we saw that in the diamonds, and now all they really need to do is get past the 20 in blue and the 50 in gold, and that will let them come back up to, if we extend this out, this will come up to here. That'll put them right back. Probably by the time they were able to do that, if they are, you're going to be looking somewhere there for flat line confluence with that blue now resistance line. But this line would probably also come in just about there at that point in time. So that'll be a big deal, getting up into here, right near there. So that's going, if that happens in the next couple of sessions or so, or by the end of the week, that could be a really big deal. It'll be back in the triangle, and then the apex is there. So you ought to expect either big time retracement to start by that point, or close to it, or they make their push and it's up and away. But right, look at the RSI, it's 50. So they can pretty much do anything from here, and I wouldn't have a problem with it. Whether they continue on or they just keep, they reverse things. I still think it's more likely. My mind, it's more likely they keep trying to extend this, because I think a lot of people are, again, kind of like caught off guard, and we saw that with the positioning. Let's take a look at the IWM, which was sliding nicely at one point, and then of course they got their hands on that, and you'll see the reversal. It's there too. But this has been one that's been doing well. It's above the 20, which is the last of the SMAs that I keep on this simple chart, this main chart that I like to demo on, and you kind of get a quick look on at times. And if we kind of come into here, and let's not IWM is no slouch itself, so let's not understate what happened here. But I think if you're a bull, you like the looks of that. That hey, there's this declining channel, descending channel, and now we're trying to double bottom and pull out of it and go. And I think I noted that they were maybe trying to do that in some of the U08 Pro. It could be in the works, U08 Pro ideas, but I mean, I like the way that looks, and I'm only at 55 on RSI. So, I would say, look, overall, you never know in any one instance, but overall, if you're a bull, you have this nice long run, this retracement that looks like this, and then you start pulling out of it to the upside. You just got to give it its due. So I don't want to talk levels in there, but you could pretty much see where the flat lines are. I think 193-ish, there's one. Probably have to put one somewhere. Yeah, you're probably going to have to put one right near about there, 195-ish, roughly, just call it. But that looks like it's destined to want to go. And like I said, look at the larger channel that it's in, and you've got higher highs and higher lows. And this kind of supported near mid channel, which is often a good sign as well. So I have no problem with that. Most of your longer term SMAs are rising. So that's a little positive there for it as well. They're really not enormous volume, but put a little more volume into that oomph, that emphatic oomph there. That's the danger, though, is these days is just not knowing like how much of this volume is really related to the hedging that had to go on for the zero DTE surge. I heard there was a lot of put buying as well, but I don't know that early on in the day. But those folks, if they were true, not hedges and true put buys, legit put buys, they put the screws to those folks. But here's our final ETF, and again, that's why I'm not spending that much time on it. I don't. You can see it's very similar to SPY, and that's why I went through a lot of this on SPY. A little bit, I think, overdone, as I've noted. I don't want to get away from that, but just remember that if you're carrying positions in, I already explained how I would tend to manage those going out Friday and what I would do. But you're at 77 on the 30-minute, right? So again, if they jam this thing on the opening, you're going to be at some real extremes that you don't really see intraday. They push this thing up, let's say 1% on the opening, and I can't tell people what to do, and I might be dead wrong, but my personal way of handling that is to say, look, the 30-minute is not a joke. And if they get it that jacked up on that, then if it's that jacked up on that, that's probably means a short term. And I only mean intraday. I mean, they likely back them up a little bit from there intraday. But even if we make an adjustment, I think this is a decent line, but even if I make an adjustment to a more conservative line up here, right, it's still overall, the pattern is still pretty good. If you're a bull, you've got this nice long trend leading in. Overall, you've got higher lows getting put in. They held the 200, 150 and reversed them. I mean, I think I hate to say it's a fait accompli, but I really do think that I'd be surprised. Let's put it that way. I'd be surprised if they don't try to test the 304 level, somewhere around there. I just think that's more likely. That's my take on it. I don't have a probability that I can assign to that. I just think if it can get above that 20-day, I think they're going to try to push it there, because the reason I say things like this is because I know that they like to do this just from having observed this stuff for so long. And patterns to me matter. And by barely exceeding that, they could get a lot of shorts to capitulate up there before they engineer a pullback. Which is always in my mind. Like, what are these? How are they going to manipulate the living hell out of something to their advantage? It just sometimes you just got to wait for it to start happening. And then when if you have it in your mind, hey, this could be a false breakdown, and then you see them acting that way, at the very least, it could neutralize your negative deltas or short deltas, and then you can, maybe consider going long if it persists like it did. But that's why I always have that in my mind, especially when it's a big, obvious area, which this was. But I mean, the cues look similar to the other things. So I think overall, these all look pretty good. I do think that kind of like the old cartoons. The bulls arrived in the nick of time. They did their thing to try to reverse out of a problematic situation that was developing. It was on flimsy material, but that's often the case. And that's, in the end, that doesn't really matter, right? We don't really even care because we're willing to go along with whatever the predominant momentum direction is as quickly as we can adapt to it. And that's the thing. I say this a lot, but I think the adaptation to what's to change, and we know this is dynamic, we know that we've got to be on guard for these things. I think if you get that in the forefront of your mind, if you're new, you're going to have a dramatic performance enhancement in a short period of time. If you're more about being a mercenary, right, that doesn't really just wants to get paid, you just really want to get paid, and it doesn't really matter to you, your opinion on what the market should do or will do is secondary by far to what the importance of what it is doing and how you're willing to adapt to it and manage it. So those are my kind of like closing encouraging comments. If you're new, that's where I think, that's where I learned to be. That's where I think it's best to be. So let me just, I'm sorry, I want to do this. I'll probably do more in sector situation on sectors we normally take a quick look at, but the dollar we said to watch, right? It was doing pretty well, but then it hesitated, but there's the DXY, right? So a big part of if the market is likely to continue could be if this falters a little bit more, right? And starts backing up a little bit more after the run it's had. It's kind of gone sideways here for the most part, right? It's not too far. We're not too far from where we closed on Friday from where we were a little over a week ago. So that was a consolidation that was, you could see quite a bit of back and forth, but if that starts rolling over, that's at least a temporary good sign, I think, for stock market bulls. The yields, which have gotten back up towards the highs that we talked about, they would try to make a push. They hesitated. They're still above their 10 SMA. So if you start seeing them sort of crack below, I would say the 15 is a big deal on this one, 38.85, and the 20 is right below there. So by the time that were to happen, the 20 will probably be the key, so keep your eye on the 20-day and 15-day, I think, in that TNX. But if that starts getting cracked, sure, there's a lot of support there, but just the back off of those and the fact that the yields are not ascending does seem to help. And just the dollar dropping does seem to help. And stocks that is. And the VIX, of course, we talked a little bit about this. And if they take this market up a little bit more, I would think that you would challenge, right? You would challenge at least this opening and that close right there. So that would be down a little bit more if they take this market up. And then ultimately, you can look here. We had one of our clients, or I should say customers, it's long-term customer, been to a lot of live events. He brought that up in cocktail hour. But to me, right, I like his idea of positioning. I've got different thoughts on it than my old friend that departed, Ron Ianieri. We had similar but different thoughts. Ron really liked to stock up on things when things got cheap, and I think that's the right sentiment. It's just that you have to manage all that, even though it's outer month stuff. You have to manage your theta pretty deftly if you do that, and you've got to find ways to generate short-term theta in your favor to sort of counterbalance that, which is, again, not as easy as we'd like in some cases, but that's a whole nother subject matter. Down here, you could see this thing could end if they put the march together that they could on that third presidential year, third year of the cycle. This thing could be trading in the mid-teens, and that's, you start getting there. I definitely would, if that scenario plays out, to answer that question that arose at cocktail hour, I would definitely start positioning myself with probably November stuff, right? I would probably go out to November and get myself some things. But again, you got to have a really good plan in place to how you're going to manage this if the market keeps going up. Because if you load up on a lot of that stuff, and it'll be so far away in terms of downside puts, aka crash protection puts, that you could get hurt on that too if you don't know how to manage it. But yeah, sure, you get in the near 15-ish, 16, I would definitely start buying. And I think there's a chance that could happen. Everybody, all of us can see this, right? There's support right around 18-ish, a little below, of course, you can't argue with that. But I mean, if that gives way, right, you could see that scenario where you work lower, and it's possible for sure. I don't know if it's probable. It could be, but I'm just saying I definitely see the possibility that this goes lower. So yeah, in that case, I would own the outer months later in the year, and I think that would be a good way to position yourself. So I think I'm going to have to wrap it on that note. Probably ran as usual far longer than I hoped to, but there's a lot going on these days, and I try my best to cover it and share some. People seem to like the idea that I share some thoughts with it, so I'm trying to do my best on that. But yeah, I've got to probably revamp it ultimately, because I don't think a lot of people like to have to sit through all this discussion. Maybe we should just do it as a weekly live thing. I don't know. We'll have to, and then just put it out there on the weekend, do it late in the week, and then put it out there, something like that. But again, we have so many other things going on. I don't even know when we'll even have the discussions on how we're going to really do this for the long haul. But again, as always, I hope that something I share with you helps you out this week or in the future. And thanks for tuning in. Have a great week and stay nimble out there.